Good morning, good afternoon, good evening. Welcome. I'm going to be talking about beauty of compounding. If you are really interested in building a long-term portfolio, long-term wealth, you have to know what I'm going to be talking about. You can't skip this. Now, let's without talking too much about it, let's jump into it. If I look at this last right hand table, it's a very simple thing. These are different percentage returns. These are monthly returns that I am talking about. And if they are monthly returns, after 10 years, what would be your capital? For example, if you are able to get any place where you could invest your money with 1% monthly return, at end of 10 years, 1 million, this is the initial equity, 1 million will become 3.3 million. 10 lakhs becomes 33 lakhs, which is same as 230% return. So in simple words, every year you are getting near about 23% return on a simple calculation. But since you are doing compounded, 1% is giving same as 23% year. 1% year. I mean, there are so many loan providers who say our interest rate is only 12%, and then they calculate out monthly 1%. So this is how much you will end up paying them at the end of 10 years. We take loans for 20 years also. So please keep this in mind. This is very important. If you have got a Lala next door who is giving you at 2% or maybe at 3%, at 2%, your 1 million will become 107 million. Sorry, uh, 1 million will become 10 million, 10 times. You are going to be giving the money back after end of 10 years. And if it is 3%, 34 times. Believe me, this is the beauty of compounding. This is how these guys are getting richer and richer. And we are taking loans from banks and everywhere else, and we are giving so much of money. So, before getting in, I'm actually going to be talking about the way we get impacted. So, here quickly, this is a simple table. My starting capital is 1 million. My monthly interest that I pay if I take more money is about 1%. It could be between 0.8 to 1% based on the loan that you might be taking. Let's say we take loan of a million, so double the capital, which will mean 10,000 rupees of interest every month on month. Let's say I have a very nice strategy or very nice trading plan which gives me 50% return with risk reward ratio of 3. What that means is every losing trade loses me 10,000. At the same time, every winning trade gives me 30,000 with a 50% probability. 50% of the trades go bad, 50% of the trades go correct. So net in a longer schema of thing, we are actually going to be making good profit, right? So let's look at it. Let's say we are taking risk of 1% every month. If you are going to be doing that alone with your own money, this is without loan. If you do that with 1 million rupees or 10 lakh rupees, what I've done here is I've done the calculation of random numbers, and based on this number, since it is 50%, so anything below 50 it will say winner, anything above 50 it will say loser. Very simple. So if I just count them, it comes to about 55%. And since this is random number, it keeps on changing. So if I change anything on the screen, anything on the sheet, it changes. Now it has become 50%. And then what I do is whenever I have a winner, I add that 30,000. Whenever I have a loser, I reduce that 10,000. And this is the running total. So if I do like this for next 10 years, going up and down, mostly up because we have a winning strategy. At end of 10 years, I am going to be earning or having capital of about 3 million rupees or 32 lakhs, which is nothing but 225%. See, look at the beauty. That 252% is still less compared to this 230%. If I have a strategy which gives me 1:3 risk to reward, and if I risk 1% monthly, 50% hit ratio, it still gives me only 252%. Let's keep changing. Let's see different random numbers. 167%. You need to be reading this number. Let me just color that quickly. Green. Okay. So 266%, 137%, not even half, 200%. So now the key is this is not even beating that 1% interest that I might be giving it to the banks. So same thing I've done. If I take that 1 million, so it becomes 20 lakhs. If I have with loan, the loser here 10,000 will become now 20,000 lose, plus I have to pay 10,000 to the bank, so 30,000 is gone. When I earn 3 times 20,000, which is 60,000. Then from 60,000, I have to give away 10,000, which becomes my near about my 50 lakh, 50,000. So that way, if I do calculation, this not even touching 200%. So here, if I earn 30 lakhs, after taking loan, after paying installments month after month, I'm not even being able to do as much. That is what I wanted to talk about here. So if you keep changing it, if this is more than 230%, only then this will be higher. And that is because we are paying 1% interest rate. So if the interest rate was little less, you would still make little more. Okay. Oops. This is I have taken 80 80%. It is 8.8%. Sorry, 0.8%. So this is how it would be. Okay. So now if I really need to look at it, let's say I have a I have an intelligent friend of mine who says no, I've got much better probability. I play with probability. I go with 70% probability with 1 is to 2 risk to reward, so every trade gives me twice as much. This is how it looks like. You are going to be getting only 210% flat risk returns, which is 197 if I take the leverage 249. So if you really look at it, my the same thing I have drawn in form of the graph, so that you don't need to be worried about those numbers, reading the numbers. You are actually not doing anything great. You see this, right? The red line is after taking loan, so it's actually not doing as good as we actually think. We think we have got very nice risk to reward, we have got very good hit ratio, 70% hit ratio, and still I am struggling. I am very struggling to really make money on a continuous basis. So this is a very important thing. As a trader, you need to know, please do not take loan and use that capital for taking risk and earning money, because it's not just the numbers here. When you start having the streaks of losses, see here, for example, even though my hit ratio is 7, let me go with 50%, that makes it easy to understand. Even though my hit ratio is 50%, I have got streaks 1 2 3 4, 4 times consecutively I'm going to be losing. Here 1 2 3 4 5, 5 times I'm going to be losing. Let's say I start my trading here. What happens? First 5 losses, I am going to be out of my 10 lakhs. I am going to be losing not a small amount, 1.5 lakhs. That is going to happen. And it's all about probabilities. However smart you are, you will get the streaks. Here, see, these are the winning streaks: 1 2 3 4 5 6 7, 7 times consecutive winners. Let's say you start your trading here somewhere and you are lucky, you get first 7 kickers, everything going your way, you are making money. You started with let's say without you've not taken any leverage, you made 1.8 lakhs in 7 months, and you're very happy. You think the sky is smaller, you are bigger than the sky, you can do whatever you want, you have got 100% hit ratio strategy. But then what happens over a period of time? It really starts showing you the reality. It start coming down to 50%, and then there would be more losers. If you really want to look at the probabilities and the percentages, you actually want to be looking at places where you have got enough trade journals available with you, you have got enough data available with you. Only then it will make sense. So please make sure when you analyze your trades, when you analyze your data, make sure that the data is sufficient to take care of your long term or sufficient data points to talk about probabilities and the way the probabilities will work. I'm sure you would have liked it. Thanks a lot. Please click on like, please share it. Thank you. Bye.